this computer.
Hey, this is Barbara Zorn here in Cocoa Beach, Florida, and I've got a special guest today that I wanted to introduce you to, Buddy Blake. He is up in North Carolina and he gets hit quite a bit by hurricanes. And I've had so many people calling asking, I want to buy a hurricane damaged house. Buddy, after you get hit hard by a hurricane, what really happens? You had all the flooding in the last hurricane.
Well, we did. We did. We had Florence, which was the flooding, but we've had, I mean, in the background, I put up the chart back there as you go up here and you can focus. And if you look, other than the Miami area of Florida, well, actually, y'all don't even compare to the number of hurricane hits that we get. And it's only because we stick out and the Gulf Stream's only about 30 miles from our coast. So we just get them. We draw them. I don't know why. But anyway, let me tell you my experience with hurricanes is don't panic. If you are somebody thinking about buying a house, don't think you're going to zoom in and steal one. Now, if one has been torn down beyond repair, obviously a lot of things you have to watch for is in our area is Cama zones to make sure, number one, the house can be rebuilt if it was damaged more than 50%. But here's the deal. It's going to take months and in some cases years for these current owners to work through their insurances. Okay? And at the end of the day, most of the ones in our areas, and the bad news is insurance goes up. The good news is they have brand new houses.
Yeah,
So
that's a nice thing.
there is no motivation. And typically at a beach community, you have people with discretionary income. We're not talking about, we're not talking about somebody where it's their livelihood and it's their one house to live. It's an inconvenience to them, and it might be they're losing income if it's a rental, but actually, like on mine, I have VRBO properties and I have loss of income protection. So
Yeah, so you really don't lose anything.
well, yeah, you really it's
I mean, it's an
aggravating.
inconvenience and there's a huge deductible, but that's it.
Absolutely, the big losers are the management companies because they still have to manage these places, but they don't get the income, the percentage of the income.
Yep.
So if you're a buyer and you're looking for a beach property, you need to. There's going to be a lot of conversations to find out what's going on with the insurance. But transactions will still happen. But don't walk in the door thinking that you're going to go and buy something 80 cents on the dollar.
No,
Yeah.
that's what I'm hearing. A lot of people calling me thinking they're going to get this steal of a deal, and it's not there. I don't care where.
Well, it's just like all the
Anybody's been hit by a
foreclosure.
hurricane.
It's just like, the interest rates are at 7 and whatever. Everybody thinks of foreclosures. And the bottom line is we're not going to see the level of foreclosures that we saw before because there aren't bad loans. There's just, we're going to be stuck in a situation where there's a lot of people that are not going to sell when they're sitting in a 3% rate.
So our inventory level is going to get even worse.
But it doesn't affect, you're an area though where you have second homes. And
Exactly. And we have so many cash buyers. 36% of our market is cash buyers. So,
and the same here, and they're looking for places to roll that 1031 money.
yep.
So it is a good time to sell. I keep telling people it's a great time to be out there because if there's not as many buyers, okay, but the buyers that are out there are looking, and a lot of them are running out of time on they have 180 days to close in order
Yep.
to save the tax situation. So they need, you need to have your house on the market if you're a seller, and you're just going to have to disclose everything about the insurance. They're going to do inspections and all those things, and then depending on the carrier, you'll work through that. It's a
Oh,
process.
yeah.
If you own a house, I can tell you my biggest thing I learned this last time, especially with roofs, is get an independent adjuster immediately.
Okay.
Don't go with your carrier. Don't just let the carrier win. You will get 2 to 3 times the money using an independent adjuster. So they're expensive,
Awesome.
but it's worth it.
It's worth it.
Yeah,
Well,
absolutely. But man, it is just it is not the end of the world, unlike a lot of places, because your buyer, your owners of your properties, most of them, like I said, it's an inconvenience, and they
Yeah.
just can't go to the beach for a while.
Exactly. They don't live here year round.
Right.
So this is exactly the information I needed to be able to tell my customers that you're not stealing a house here in Florida. I wish you could, but me and you would be jumping in it if we could.
Well, let me put it this way: if it was a steal, it would never hit the market, and they would never hear about it. Okay.
Exactly.
That because they would have, it would be their neighbor, it would be their lender, or it would be something like that. So
Yep.
now you are going to have scenarios, unfortunately, where people are going to get insurance settlements and then not do the work. Then you might be able to buy something, but you're still not going to get a deal. The seller's trying to double dip.
Yep.
But, and when you buy, you need your insurance company to absolutely run a risk report to make sure of any previous claims on that property. Because I'll give you an example. We had a lot of situations here where people would get, after Florence, I mean, we had like 60 inches of rain in 36 hours. And it was just unbelievable. And what happened was they got $15,000, $16,000 for a new roof. Well, they didn't put a new roof on. And they sold the house, didn't disclose they didn't put a new roof on. The agent doesn't know. Well, 3 years later, their insurance company, then another storm comes and it does roof damage. And they're like, no, we've already paid for a new roof. So
Not doing it again.
Yep, not doing it again. And it's getting tighter. I mean, insurance is going to go up.
Oh, yeah.
I
Insurance.
mean, especially, in Florida, it's going to go up because we've just been crushed along the coast. But
Oh,
the
yeah.
truth of the matter is, the interior portions of the United States cause more flood claims than the coastal does.
That's good to know.
No, it is. Because the coastal, the water comes in and it goes out.
Yep.
If you're in the middle of the country, low-lying areas, riverbeds and things like that, it sits and sits and sits and sits. So there is more damage from flooding and more, cost from that than there is along the beaches. It's just easier to raise the beach prices because everybody perceives they got the money.
Yep. That much is true.
So what's going on in your world? I mean, tell me what you're seeing. From our perspective,
We didn't get hit. This area of Florida didn't get hit by the hurricane. Some people say that Kennedy Space Center was designed in this area because we typically don't get hit very hard. Just north of us and just south of us got hurt, but we had some damage here from the torrential rains but for the most part, no, we don't get hurt as bad. But what we are seeing is a little bit more inventory, but we're still only at 2 months worth of inventory. And we still got tons of cash buyers. So the market really, it's still clipping along at a good pace.
Well, and those cash buyers had better snap up stuff because a lot of people, if they're sitting on a 2 and 3/4, I'll give you an example. I refinanced everything I've got on everywhere at 2 3/4, 3% fixed.
Yep.
And I'm not selling.
You're not selling, exactly.
So there's going to be the inventory level. It's going to come back some, but it's not going to come back to the levels it was.
I don't think so at all. And we don't have, like, if you look at Brevard County and you look at the courthouse, they're going to tell you how, we're up 100% or something. So we went from 10 to 20.
Oh yeah.
There's just nothing there. It's not enough to make a difference. It's just back to everyday levels. It's not.
Yeah, I
There's
think
not inventory coming from that direction. It just isn't. And then we've still got all the millennials still trying to buy and get into their first home.
Well, and then you got to figure out, and with the amount of equity everybody's got, because the equity hasn't changed here. We haven't seen price reductions. Have we seen less negotiation, less numbers of buyers? Yes. Have we seen having to deal with home inspections and actually get a house ready to sell and get back to normal real estate? Yes. And I'm really glad about that because that was about the most uncomfortable scenario to be put into, is trying to advise somebody to go $100,000 more than asking. I mean,
oh yeah, and no appraisal contingency.
yeah, and waiving your whole life, your firstborn child or something.
Yep, that was crazy. So we don't have that. And then in the state of Florida, we have a $20,000 no interest loan out there for our heroes.
Oh,
And that
wow.
goes from teachers to firemen to nurses to all kinds of people qualify for that. And the deal is they get the $20,000. It's a lien against the house, but they get it in cash up to 20. And then they turn around and until they sell the house, they never have to pay it back. And when they pay it back, they're just paying back 20,000, no interest. So it's a
Well,
pretty
the
cool
other
program
thing
out there.
we're recommending a lot of folks move over, even credit unions and some of that, because some of them are doing arms at five and
Okay.
a quarter. And do I think that the rates are ever going to be 3 and 4 again? Probably not in our lifetime. But I do believe that they're going to settle somewhere in the 5s and 6s. I mean,
Yeah.
historically, over the last 50 years, that's the normal rate. My first rate was 8 and 3/4 many years ago.
Yep, that was mine.
My parents talked about 18%. So, what we saw is never going to happen again in our lifetime
That
because
much is true.
it just isn't.
And
Uh,
same thing like when we had the bubble. I don't think we're ever going to see that again in our lifetime.
no. So I think that, and then the rent rates, people aren't going to get rid
Yep.
of these properties with the rent rates the way they
No.
are. So,
Mm-mm.
and it's still
No.
cheaper. Even, here's the deal. There's also this interesting spread for people that's got cash. All right, I deal with First Citizens. Do y'all have First Citizens there? It's a
Not very
privately owned
close.
bank. They're in America a lot, but it's privately owned. But long story short, I they're paying 2% on money market or savings accounts. They
Wow.
will give me the loan at 6 and 1/4. So they were paying me 1/4%. So right now my spread is only 4 and 1/4 to borrow money.
That's not bad at all.
No, so you got to look, and that's not even counting the mortgage interest I get to write off.
Oh, yeah. And that's a
So
big benefit.
you got to look at now, if it's all the money you got and you got no savings or you got no benefit, but don't just throw all your savings, understand the spread. Because
Yep.
even at 7%, if you're getting 2%, you're effectively paying 5%. And then when you take the interest part of that down off of it, you're bringing that down to an effective rate of when your taxes are all said and done to 4, 4 and 1/4, 4 and 1/8, or something like that. So it's still
You
an
can't
incredible.
get that out on the market.
Nope. No.
Nope.
So you got to look at the big picture. And the good news is, you're dealing with people that have money and probably have money for a reason. They understand a
Yep.
lot. But,
They understand numbers. They understand.
but we're going to
So
get through it. And I like, it's slower for us.
yes.
What I do like is I'm taking the time to get some systems done, and it's also weeding out the agents in our business and the lenders in the business and the car people in the business and all the service providers of the people that are going to work and not work. Because the people that work will always do well.
They'll always be fine. And what I'm telling people is we're back to our historical for at least Florida here. From Thanksgiving to the first year, we have a few people, corporations, because we have the rocket scientists relocating. We have a few of the military relocating, but for the most part, you don't have a lot of people buy and sell and want to move during that time of year. So it is a little slower, but come January, boy, the snowbirds arrive and it's crazy around here again.
Yeah, I think you're going to be busy. I was actually in Orlando when the hurricane hit.
Where are you?
We were at Universal, and we
Oh
were
my gosh.
the day before it hit. So we had the whole place to ourselves. We hunkered down at the Gaylord Palms with about 2,000 linemen that were there waiting to go in, and
Wow.
then we moved back over to Universal, and it was great. So we had a great time. But
Uh,
we go through a lot of hurricanes, and we knew, Orlando, certainly there's issues, but we also know that it typically is, it resolves itself quick, and and it's not nearly as busy.
yeah, exactly. Well,
So,
good catching up with you, buddy. Thank you so much for this.
well, Barbara, let's stay in touch.
Your market is doing good too. Your market is just a little slower, but still
Here's
good.
the deal. It's better than it was 5 years ago. It's nowhere near what it was a year ago. So
Yep, that makes
good
sense.
is a perspective. Is it good over what it should be doing? If you look at a normal trend, we're doing great.
Yep.
Okay. But if you just look at the last number, the crazy stuff that happened in the last 2 years, it sucks.
Yeah. But that was just like the bubble, a rare time in history. You're not going to see it again.
But we learned our lesson this time. We've got our powder dry. We've streamlined. We're running slim, and we're going to take care of the agents that have been working really hard, and say goodbye to the agents that aren't prepared to do the work. And we're going to provide as long as you provide a high level of service to your clients and stay in communication with them, you're going to win every day, because agents are trying to automate all that. And I'm sorry, you can't. You can't automate.
And it's a people business, so we've always been a people business. So true. You and I think the same.
Yeah. Well, listen, great chatting.
Yeah.
And let's catch up again, Barbara.
You got it. Keep in touch. Thanks again. Bye.
Bye-bye.